Hello and welcome back to our channel Polo Vega. On today's video or on the weekly commentary week 3/4 year 2026, we shall talk about whatever has happened during last week, which was week 3 January 2026, and whatever we expect to happen during week 4 2026. We shall also talk about two very famous indexes or very popular indexes, which are number one is Nasdaq from the US and the other one is Nifty or the Indian online index Nifty 50. Before we move on to our video, let's look at the disclaimer/disclosure clause. The contents of this presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 25th of a series of interactive videos aimed at educating our viewers, and we would like to warn all our viewers of the risk associated with the business of trading and investment. Securities investment and trading is a highly risky business, and there exists a possibility of partial or total loss of investment. The ideas and opinions in our video are solely based on our analysis of the market, and we do not advise, recommend/guide anyone to take any trade based on the contents of this video. And we do not take any responsibility for partial/total losses arising out of trades based on the contents of this video. Week 3 had a quiet economic calendar but was rocked by the tumultuous geopolitical event at the beginning of the week and continued until Thursday, when some of the world leaders at the Davos World Economic Forum managed to bring down the tensions by a notch, and this helped restore some order to the extremely volatile trading conditions. However, the markets haven't fully cooled down after the geopolitical event, and the traders are still buying safe haven assets and avoiding risk. Gold printed a new high on Friday, the close of week 3. Things could still flare up, and hence one should be ready for the unwarranted volatility induced by surprise events during the week. Week 4 as well is going to be a light economic calendar week, except for the monetary policy and rate decisions for CAD and USD on Wednesday. There's also the Aussie CPI data due on Wednesday, USD unemployment claims on Thursday, USD PPI on Friday, and CAD month-on-month GDP on Friday. We shall now look at the Dixie or the American US dollar chart. While we anticipated the US dollar to stay a step and climb back to the 100 mark, it could not do so, and in fact it gapped down from the close of week 2 Friday and continued printing red candles during the week. With the rate cut decision due on Wednesday, one may expect the Fed to discontinue rate cuts after 3 rate cuts in a row, but there could be small political news which could make the market more dovish towards the greenback, and it may continue to fall further. It's best to hold your horses and allow Fed to come out with the statement and rate cut decision on Wednesday, as the dollar behavior along with decisions made by the US government tends to impact almost all asset classes directly or indirectly. We shall now talk about the performance and movement of Nasdaq, the online American exchange, for this week. Nasdaq gapped down on Tuesday, Monday being a holiday in the US, with the announcements over the weekend leading to a tumultuous start of the week and pushing the investors towards safe haven assets. The NQ printed its last highest high on 29th October 2025 and then fell to 24140 on 21st November 2025, a low which it has avoided ever since. The controlling low happens to be in this area between 24140 and 24570, the close of the candle on 21st November 2025. The controlling high is the candle printed on 4th November 2025, which is the area between 25836 and 26400. The asset class is currently directionless and moving sideways with very little to be guided by in terms of technical analysis. We do not see any trades on the daily chart for the time being. We shall now talk about the Nifty or NSE 50 in the Indian index, which happens to be the online trading exchange in India, the so-called Indian Nasdaq. However, the Indian market sentiment has taken a hit ever since the US government announced tariffs and amended its immigration regulations, making it difficult for Indian IT companies to export their services or technical know-how to the US. Nifty, now exactly following the Nasdaq, has been trading sideways between October to January, making higher highs in the process, with the last high of 26510 printed on 5th January 2026. However, this time the gradient of the drop was quite steep and it managed to break the support area at 25800 on 9th January 2026. Since then, it has made two lower highs and is in a confirmed downtrend technically. You may find its next buying interest in the area of 24750. Otherwise, one should look at shorting the rallies between 25600 to 25725 and look at coming out below 25,000 unless the index prints a demand area around the psychological support of 25000. It's a complete sell as of now for the Nifty. We hope you liked the contents of our video presentation and found it informative and enlightening. We shall continue to touch upon the events which were the highlights of the weekly economic calendar and shall also talk about asset classes which have been interesting each week. If you liked our video, please give us a thumbs up and press the button underneath to subscribe to our channel Polo Vega and watch all our videos. You may also visit us at our website www.polovega.com or get in touch with us through our Twitter handle @PoloVega. Please keep saving, keep investing, and keep getting wealthier until we meet next. We thank you for watching our video. Please like, share, and subscribe to our channel Polo Vega.